Credit score mistakes to avoid when buying a home. Hey, bad credit scores can really adversely affect your life. For example, if you have a poor credit score, it's going to make a lot of things more expensive for you. When you're going to get insurance, whether it's for home insurance or car or anything, you're going to pay more in insurance. If you're going to get a mortgage and you've got a bad credit score and you get a mortgage, you're going to pay a higher rate on your loan. And it can even affect your ability to get a good job. So having a bad credit score is something you really want to fix. And so in this video, we're going to go over things to avoid so you have a basic understanding of things that make your credit score, bad. So firstly, this is specifically if you're thinking of buying a home, really soon. Here's some things that you definitely do not want to do. First, don't shop around too much for mortgage rates with multiple lenders. So don't go to like 15 different banks and lending institutions. You think like when I go buy a shirt, I'm going to go to a bunch of different shops and see, who's got the best price and get that one. Don't do that with mortgage rates, and I'll explain why in just a second. And the same reason, if you're thinking of buying a home, don't be going at the same time going to a car dealership looking for a car loan. You want to get a new car or something. At the same time, don't max out your credit cards and don't get a new credit card. Now, the reason that doing any one of these things can negatively affect your credit score is because of the difference between what they call in the business, the difference between a soft credit score pool and a hard credit score pool. So for example, if you go to a specialist, someone, who can, tell you all about loans and the rates and stuff like that, they can do what's called a soft pull. So you should know that term. A soft pull means, you give them your basic information, social security and whatnot. They'll go to the three main, credit bureaus like Experian, and they'll get from those three a basic credit score for you. And that's okay. That's not going to adversely affect your credit score. You can do that yourself online. But what you don't want to do is get a hard credit pull. So that's when, maybe you go to a lending institution and then they're going to look, all over the place at your credit. And as an example, if let's say you've maxed out one of your credit cards, but you're good normally in paying off the credit, but you just had a difficult month or whatever. This time, with inflation so high, that might be something that happens, and you just haven't got around to paying off that monthly credit bill, but you normally do. If you get a hard credit pull just at that point in time when your credit's maxed out, even though normally in a week or so you're going to pay it down, that will adversely affect your credit score, because at that moment in time, the lending institution will say, hey, they've got their credit card maxed out. We're going to reduce their credit score from good to bad. Now, so that's why you don't want to go around, asking lots of lending institutions, what rate can you get me? Because they'll do hard credit pulls, and it'll adversely affect your credit score. Same reasoning like going to a car dealership, for example. So that's really important. Before you're going to buy a house, get with a reputable loan officer, someone you can trust, who just do a soft pull. Remember that term, a soft pull credit score. You can see roughly what your credit score is, and that'll give you a good indication of what you do. Now, if it turns out that you have a bad credit score or poor credit score, it's 530 and below or something like that, there are things you can absolutely do to fix your credit score almost immediately. You can go, for example, to credit repair specialists, and a good loan officer will actually know how, could refer you to someone who can help you do that. And things that they could do, for example, is they'll look at all your, your credits, or maybe all your credit cards. Maybe you have a loan for a car, maybe you have something else going on, maybe you have a medical bill. And they'll look at all those things and they'll come up with a payment plan saying you need to pay off, this one and this one. It might be this credit card, and it might be, this car payment or something like this. And the other ones that you're not, that you need to pay, you can just leave them alone just for a minute. Those ones are not going to affect your credit score, but if you don't pay these particular ones, it is going to affect your credit score. So that's the first thing. You can get valuable information on which items, that you're currently in debt for that you really need to pay attention to, and which ones you can just let go just for the moment in order to get your credit score better. So that's one area. And also, you might have an old debt that is having a negative impact on your score, and they might be able to help you get that removed. So that's a couple of examples of ways you can help fix your credit, and also I've given you some tips on things to avoid. All right, so I hope that was helpful. Remember, it's really important, especially with interest rates going up, to have a good credit score. It really affects your life. So hey, let me know what you think. Have you had any experience in fixing your credit score? Drop me a comment. Let me know your experience. And stay tuned for more videos. We'll give you some more helpful advice here. I'm also going to do an interview with a loan specialist here coming up, so you can hear it direct from the horse's mouth, as it were. Hit the subscribe button. Thanks for listening. I'll see you in the next one.